Live at TFNN. Breakout Investing. With your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Where else? In the pre-market, pre-show music, can you get Sugar Ray, a.k.a. Mark McGrath, followed up by one of the Dead's great tunes. But thanks for tuning in very much. Again, Breakout Investing on TFNN. My show airs every Tuesday and Thursday on TFNN from 3 to 4 Eastern. It's a call-in show. Feel free to call 877-927-6648. If you can't listen to the show live, you can always head over to iTunes and get the podcast. That's easy to do, and don't forget you can listen to all TFNN programming on your smartphone. All you have to do is type in tfnn.mobi in your smartphone browser, and you can get the stream that way. I'll be going over charts on the program like I always do. If you want to look at those charts live right along with me, you can do it with Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live, and it is archived in Channel 13. And don't forget, a little while back, Tiger TV, you can now watch Tiger TV, I should say, with your smartphone as well. Get a nice clear picture that way as well. All right, let's take a look at this market that looks like it's a little bit on the ropes here. Maybe a little bit is an understatement. A lot of damage that's been done in recent days. Start by taking a look at the S&P 500. Let me get a little refresh on this chart. We'll see that the benchmark index is trading right in the middle of its trading range today, down about 10.5 points. Call it 0.8% to 1359. It hit an intraday low of 1347, intraday high of 1369. But volume pretty heavy in the S&P 500 today. I should say on the New York Stock Exchange and the NASDAQ volume is on pace to come in quite a bit higher than what we saw on Monday. NYSE volume on Monday was a tad below average. Right around 750 million shares. NASDAQ volume on Monday, about 1.65 billion shares, also below average. So today, volume tracking higher on both exchanges. So for the S&P 500, really looking at the low of 1340. 1340. This is back over here in early March. 1340 on the S&P 500 is a swing point here. Could be support. The positive thing that's gone on in the S&P 500 lately is you did have a good shakeout today. In other words, the lows that were put in right here and the low that was put in right here were undercut today. So you did have a good shakeout. It's not out of the question. Not likely, in my opinion, but it's not out of the question that you could see a little rally from here and a potential double bottom pattern taking shape in the S&P 500. That being said, no doubt there's been a lot of technical damage done in the market. Market is well up off its lows today, which is positive. It was weak yesterday, but managed to finish mixed and mostly unchanged. So, you could have two constructive sessions in a row, but that doesn't diminish the fact, or the bottom line is that there's still a lot of damaged individual stock charts out there. Boy, a lot of stocks really getting hit hard today, and I think that's meaningful price action. So I think this is a dangerous market right now, a market where I've been raising cash in my model portfolio. I've been doing it for several weeks. Even 2-3 weeks ago, I had a fairly substantial cash position in the model portfolio. I've been making small plays here and there, but by and large, the cash position is as big as it's been in a while. I still have 4 open positions in the model portfolio, but definitely not in any rush to get in the market's way here. I think the selling probably has a little more left to go, but got to be open to all scenarios here. So that's a look at the S&P 500. Let's move over, take a look at the NASDAQ Composite. And let's see here. NASDAQ Composite. Here you go. Okay, we'll see the NASDAQ Composite is turning in a pretty resilient performance today. Hit an intraday low of 2,900. Interesting, because 2,900 is the low put in. I've just talked about 1,340 on the S&P 500. 2,900 on the NASDAQ was set pretty much on the same day, it looks like, in early March. So the NASDAQ touched 2,900 and now is up near its session high. So I had a feeling this area would get tested. It did, and the NASDAQ is up near its session high. It's still down 22 points, about 0.8% to 2935, but a nice bounce off its low today for the NASDAQ composite. Certainly the tech index has got, a lot of damaged charts in there as well. Yeah, normally when you get technical damage done to the market of the magnitude that we've seen in recent days, it does take time to repair. You'll see some dead cat bounces. The market's going to, do its best to suck you in, suck unwitting investors in, trying to convince you that it's healthy. But, the bottom line is from between late March all the way up until today, you've had pretty meaningful distribution going on. And when you get distribution of that magnitude, of just an influx of higher volume declines, it normally takes a little while for that damage to repair, I should say. A lot of growth stocks are going to come back. They're going to start to retest their former highs. Others are not. Others are going to stay dead money for a long time. The key is going to be when the new leadership does emerge, whether it's days from now or weeks from now, identify it and be in the right stocks, not the wrong stock. So I think this consolidation pullback probably has a little further to go, but again, you have to be open, you have to be nimble. Bottom line is that you have to be always on the lookout for buy signals when they arise in the major averages. We talked about a buy signal that arose in the S&P 500 not that long ago. We saw it happen. It was a buy signal, but it didn't work. The buy signal was right back in this area right here, where the S&P 500 followed through. And I mentioned at the time that it's always important to recognize when a follow-through day occurs. They don't all work. The majority of them do, but they don't all work. And if they fail, they fail. Then you have to switch gears again. But at this point, going to be looking for a buy signal again. May take a little while before we see it, but I've got to be ready for anything. Finally, let's take a look at the NASDAQ 100 index. And you can see there's a little shakeout going on here as well. It undercut its low put in this area here in April. Still has its low back over here in March to contend with. It's not there yet, but the NASDAQ 100, after hitting an intraday low of 2587, is now trading around 2620, about 30 some odd points off its low. It's down about 18.5 points, 0.7% today. Like the NASDAQ composite, trading up near its session high. So, rough day for the market. A lot of damage done to leading stocks. We'll take a look at some earnings reports in a little bit. But that's a look at the major averages. Let's take a look at Dow component, McDonald's. A lot of Dow components acting weak today. McDonald's really taking a hit, down $2.12, 2.2% to 93.39. The news about McDonald's, they said global same-store sales rose 3.3% in April. That was below expectations. They talked about a challenging global environment. Last month, the company said it expected global same-store sales growth to be about 4%. So it was a disappointing number from McDonald's, and the stock is paying the price as a result. Take a look at Dow component Walt Disney. It's coming out with earnings after the close today. I got to tell you, Disney looks pretty darn good here ahead of earnings. Now, this is a bullish chart. Market's trying to make a case here. Hey, longs, you may want to get into the stock ahead of earnings. Very risky buy ahead of earnings. I typically don't like to see a bullish chart like this and take a position. Of course, there's a chance the numbers could be very good at Walt Disney. And again, it's a very strong technical setup. But Walt Disney right now up well off its session low. It hit a low today of 43.09. Shares are trading around 43.95, up 0.3%, outperforming in a down market. Let's take a look at a weekly chart. of Walt Disney, and I'll show you this bullish technical structure here. A big, long cup with handle pattern. Here's the handle area here. Sellers getting shaken out. You have a pretty clear swing point here of 44.50. So if the numbers from Disney are up to snuff after the close today, it could see a little bit of a move in this stock. Disney profit's supposed to come in at 55 cents a share, up 12% from a year ago, with sales up 5% to $9.56 billion. As usual, investors will be looking how how ESPN is doing, some of their TV assets as well as their theme parks. Always very busy information in Walt Disney's earnings report. But hey, stock is looking pretty good ahead of the numbers. Mentioned the NASDAQ 100 trading up near its session high after early weakness. Let's take a look at shares of Apple today. Apple, to me, Apple really looks like selling pressure is drying up here. That doesn't mean the stock is a buy here, but it does look like selling pressure is drying up. The stock right now is down $1.79, not much at all, 0.3% to 567.69. And let's go ahead and take a look at a weekly chart for Apple. And my friend Sheldon McIntyre over on Twitter, who shares a lot of useful investment information, noted that last week you had an inside week for Apple. You see it closed near its low last week, but it traded inside the range of the prior week, and volume on that down week was the lowest since the beginning of January. Another indication that selling pressure could be drying up in Apple. So longs may be getting in a position here to try to make a long play. You see the stock is still trading below its 10-week moving average. But bottom line, with Apple, stock is holding up very well today in a down day for the market. So Apple, NASDAQ 100 component that's not doing too badly. Let's take a look at shares of Intuitive Surgical, also in the NASDAQ 100. It is down $7.65 today, 1.4% to $556.35. Still holding above its 50-day moving average. This is a bit of an anomaly in the market because that's one thing you've been seeing. A lot of growth stocks breaking support levels. In many cases, it's in heavy volume. That's telling me that a lot of these big winners in the first quarter are ready to base and consolidate gains for a while. That process normally takes several weeks to happen. But again, that base building process, a lot of stocks are going to flex their muscle. They're going to eventually retest their former highs. But again, some will and some won't. You want to pay attention to the ones that do, the ones that have the ability to lead. I'm not sure that Intuitive Surgical is going to be in that camp, but right now it's one of just not many stocks that are continue to hold above their 50-day simple moving average. So that's a look at Intuitive Surgical. One stock not so lucky today as we head into break. Wynn Resorts, disappointing earnings from the casino operator in Macau, China, down 5% to $118.89. All right, folks, headed into the first break. You're listening to Breakout Investing on TFNN. We'll be right back.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be at the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of of shorting and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Before we headed into break, just talking about the shakeout going on in the NASDAQ 100, how selling pressure seems to be drying up in shares of Apple. Intuitive Surgical still holding above its 50-day simple moving average. Still have Wynn up in Tiger TV. That company really got hit hard by disappointing earnings. Not so much in Macau. Casino growth is still solid in Macau, but Vegas was weak. That's what hurting shares of Wynn today. But also in the NASDAQ 100, let's take a look at shares of F5 Networks. We'll see that F5 is also well off its lows today. It hit a low of $125.02 a share. It is now up at $129.12. Still a broken stock here, though. I'd love to see the indices today, finish up near their highs, and I'd like to see, just a nice rally into the close. But the market's still in trouble here. Market still has a lot more work to do to prove that a new bona fide uptrend is upon us. It's not there yet, and so a good day taking shape for F5, recovering off of from early weakness. But this is a damaged chart as well that's going to need some time. And finally, let's take a look at Priceline, also in the NASDAQ 100. Nice little bounce for Priceline off its 50-day moving average. It's still down $11.59 today, 1.6% to $726.06. Its earnings report is due this week. So I don't recall if it's Wednesday or Thursday, one of those 2 days either. I think it's actually tomorrow after the close. All right, appreciate Robert from Chicago hanging on. Robert wants to talk about Dunkin' Brands, it looks like, DNKN. How you doing today, Robert?
Oh, great, Ken. Thanks for taking my call. And
you got it.
So Ken, it's not unusual to ride by Dunkin' Donuts and see people actually sitting in the cars waiting in line to buy a cup of coffee from Dunkin' Donuts at drive-thru. Also, I've been to India, and I've noticed the news recently they are opening a store in Dunkin's opening a store in India. They drink a lot of tea in India, and Dunkin' sells a lot of coffee. But I guess, can you talk about Dunkin' Donuts? I'm in no hurry, given the way the market is, to enter this, but I'm looking at it. It's holding up well. I would enter it for a longer-term trade, not 3, 6, 9 months, maybe more.
Well, I love Dunkin' Brands. It's a current holding in my Ultimate Growth Stocks model portfolio. I've been in the stock for a little while. I've been cutting a lot of stocks loose lately, taking profits in some names, and I've held on to 4 stocks, and Dunkin' Brands is one of them because it's it's hanging in there above support, and I just didn't want to just cut everything loose in the portfolio. I wanted to give my strong performers time to work. So Dunkin' Brands is a very real growth story. I just think that Baskin Robbins is another big part of their business. Dunkin' Donuts are they're more prominent restaurants with the donut shops, but Baskin Robbins is still doing well for them. The ice cream stock. So this is a company that short interest is still relatively high, Robert, in Dunkin' Brands, but I'm not overly concerned about that because when companies are growing like Dunkin' Brands is, sometimes they carry a higher than normal debt level to kind of fund that expansion, and then sometimes short sellers try to take advantage of that. But I like the way the stock is trading. I'm not in any hurry to sell it, and I'm looking at it today. While the indices are still lower, it is trading up near its session high, now up 6 cents to 32.69 after hitting a low of 31.27. So fundamentally and technically, I still like the stock, and I mentioned in my newsletter recently, it's still in the early stages of expansion, at least in terms of their donut shops are concerned. So I'm a fan.
Yeah, 2 questions. They've already reported, or they report?
They did already report earnings. Yeah, they're already out with earnings, and they actually had a pretty good day when the numbers came out. I think it was in late April 26th, I want to say, is when they came out with earnings. They made 25 cents a share, up sharply from 8 cents in the year-ago quarter, and their revenues were up 9%. They did about $152 million in the first quarter. So, yeah, I like it a lot, Robert. I give you my blessing.
Can I ask one more question about something? It's a recent IPO. Is it a sliver deal?
You know what? I'm not sure about that. I will look into that, Robert, and I'll try to answer that by the end of the show. But I'm headed to break right now. Hard break,
Thanks,
okay?
Ben.
So we'll talk to you. Okay, take care.
Thank you very much.
Breakout Investing on TFNN, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations options, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Let's take a look at the U.S. dollar here. I see the U.S. dollar index at last check was right around 79.74. 79.74. This is a look at the U.S. dollar index as of yesterday's close. It closed yesterday at looks like 79.60. It is now trading around 79.74, and yesterday you can see it touched that critical $80 level. I've said in the past that the U.S. dollar index is going to have to break out over a descending trend line for me to believe that there could be additional upside, additional strength in the dollar. It tried to make a move over 80 yesterday and failed miserably. It eventually closed at 79.60, but again today it's working on, I think, 7 straight up days. 1, 2, 3, yeah, it'll be 7 straight up days for the U.S. dollar index if gains hold today. Right now up about 14 ticks to 79.74, and of course a strong dollar is most likely going to continue to be problematic for the stock market. So watching the dollar closely here. Taking a look at crude oil today, down 1% to 97.01 a barrel. Unbelievable price destruction in oil over the past 5 sessions. The front end contract down about 8.6%. E&P firms have just been obliterated lately. I want to take a look at Pioneer Natural Resources here, and I think I mentioned this stock on the show last week. This was at one point a holding in the Ultimate Growth Stocks model portfolio. I bought the stock because of good technicals, but when a technical picture turns south, it's important to pay attention to institutional selling in a stock when it arises. And with Pioneer, what you had was a very strong earnings report, and I believe the earnings report was last week, where the Texas-based oil and gas producer reported a 95% rise in quarterly profit excuse me, of $1.23 a share. That was on May 3rd, this day right here. You can see the stock hit an intraday high of 117.63. I thought chances were good that this stock was going to move on the strong numbers, but look at what it did. It reversed in very, very heavy volume. There was a wave of institutional selling in that stock on that day, despite a 95% rise in quarterly profit and a 238% increase in revenue. They did $882.8 million in the quarter. That was more than $100 million above the consensus estimate. What does the stock do? It reverses in heavy volume. That is unhealthy price action. My objective was not met, so my stop triggered, and I got out of that stock with a tiny, manageable loss. That is the way I go about things in my Ultimate Growth Stocks model portfolio. The goal is to buy a stock at the right time and watch it go higher. A lot of the times that's going to happen, but as I've said before, I'm not going to bat 100% picking stocks. Sometimes things aren't going to go as planned, so you have to have an exit strategy in place, and I did have one with Pioneer Natural Resources, and I'll tell you what, I mean, the E&P firms, exploration and production firms throughout the oil and gas space have absolutely been obliterated lately. They're starting to look a little oversold here, but what I'm seeing as a technical investor is a lot of technical damage. Now, with PXD, you can see it came close to its low of 99.82 that was set back here in March, and kind of tested it and is now up near its session high. So maybe it's bottoming here, but I'm not touching the E&P firms at this point. Going to wait for better setups to present themselves. So taking a look at gold for June delivery fell $34.60, down 2.1% to settle at $1,604.50 an ounce. That's the lowest settlement for the most active contract since early January. So gold continues to get taken apart here. Let's take a look at the GLD, popular ETF that tracks the price of gold bullion by 1/10. GLD gapped down today in heavy volume. It's down $3.11, close to 2% to 155.97. So GLD remains very troubled as well. Let's take a look at financials via the XLF. This is the Financial Select Sector Spider Fund. XLF today is down 11 cents, 0.7% to 15.07. Top holdings of the XLF include Wells Fargo, JP Morgan, Berkshire Hathaway, Citigroup. This still looks like it's in trouble to me, technically sitting below key support levels, but XLF down 0.7% today to 15.07. Doesn't look like the financials are ready to provide market leadership anytime soon. All right, no economic today. Pretty quiet in terms of economic data, but tomorrow we're going to get the actually, no, not tomorrow, Thursday. We're going to get the latest reading on weekly jobless claims. Are expected to be unchanged from last week's reading of 365,000. Friday, latest reading on wholesale inflation with the producer price index. Overall prices are expected to be flat with the core rate up 0.2%. Finally, the University of Michigan sentiment. Also Friday, get the first look at consumer confidence for the month of May. Index is expected to fall slightly to 76 from 76.4 in April. And you know what? Actually, it's not the first reading in consumer confidence, because earlier today, Investors Business Daily and Technometrica released their first reading on consumer confidence for the month of May. The IBD TIP Economic Optimism Index fell less than 1 point, 0.8. Less than 1 point, or 1.6%, to 48.5 from 49.3 in April. So a slight drop in consumer confidence there. Readings above 50 indicate optimism, below 50 indicate pessimism. You've got three components to this index. 6-month economic outlook basically measures how consumers feel about the economy's prospects in the next 6 months. That fell close to 2 points, to 50.4, still slightly in optimistic territory. Personal financial outlook, that measures how Americans feel about their own finances in the next 6 months. That rose 1.5 points to reach 56.3. That's still in optimistic territory, but what is still in decidedly pessimistic territory is the confidence in federal economic policies. Basically measures views on how government economic policies are working. That fell 2.3 points, or nearly 6%, to 38.7. So slight drop in consumer confidence today from the IBD TIP Economic Optimism Index. Let's take a look at some earnings reports today. I think you'd have to say that the bad news clearly had the upper hand over good news today, unfortunately. Let's take a look at Rackspace Hosting. This was a former holding in my model portfolio that I decided to take profits in not that long ago, and I'm glad I did, because the numbers were disappointing from Rackspace late Monday. Stock is getting walloped today, down $5.48. 9.5% to 52.32. Quarterly profit, I mean, the bottom line and top line growth. Listen, I can see the bulls are going to be pounding their table here, but stock really getting hurt today in heavy volume, even though it is trading up near its session high. Remember, Rackspace did hit a low today of 49.50, hit a high of 52.63, and it's trading close to its high as stocks try to rally late here. But earnings at Racks were up 70% from a year ago to 17 cents a share. That missed estimates by a penny. When you're a high multiple stock, that's a no-no. Sales up 31% to $301.4 million. Problem here was that cloud services growth decelerated slightly from the prior quarter. And again, that's a problem when you're selling at 93 times trailing earnings and 70 times forward earnings. So it's a high multiple stock that is getting hit today. I wouldn't even know really where to start doing technical analysis on Racks at this point, with its big gap down today. Again, buyers came in and supported the stock when it fell down to the 49.50 level, but it looks like a broken stock to me at this point. Another big loser today, a stock that a technical picture was not terrible headed into earnings. It was starting to look tired. There's no doubt about it. You can see it hit a new high back here in March, and then buying demand just started to dry up in shares of Mako Surgical, but the stock is just getting killed today, down $15.17. About 37% in just one day to 26.23. This is a stock, very innovative technology here. They make advanced robotic surgical systems and implants that are used in minimally invasive orthopedic knee procedures. So Intuitive Surgical, it's not, but another robotic surgical firm that serves a niche market. Company still is not profitable yet, but what investors have liked in recent quarters is strong top-line growth. But the growth this time wasn't as impressive. Sales were only up 51% to $19.6 million in the quarter, and I believe the outlook wasn't good here either. Let's take a look at shares of Mindray Medical, another medical technology firm based in China. Wild day of trading for Mindray Medical. Stock is only down 54 cents now, 1.7% to 31.25. This stock hit an intraday low of 26.17. There have been some incredible moves to the downside in individual stocks today, but definitely a wild day of trading. Another stock where it's going to be very difficult to do any sort of technical analysis here. What you do have in Mindray Medical is institutional selling that's been going on in the stock for the past 4 or 5 trading sessions. Another broken stock here. They make patient monitoring medical imaging systems. Earnings fell 6% from a year ago to 34 cents a share. Sales up 21% to $219 million, but sales growth has been decelerating in recent quarters, which is a problem. Boy, I kind of feel bad for longs of TransDigm Group. This is really just a very well-run aerospace company with great growth. It was another strong quarter of growth. It really looked like it was going to buck the trend. One of the few bright spots in earnings today. It hit an intraday high of 132.69, hit a low of 125. It's trying to come back here, but breakouts are just not going to have a easy time making headway at all in a market like this that is clearly under some distribution here. The numbers at TransDigm were very, very solid. Again, this is the same industry group as Boeing, BE Aerospace, Hexcel. There's just a lot of companies that are firing on all cylinders in the aerospace group. TransDigm makes engineered aircraft components. Their fiscal second quarter earnings jumped 72% from a year ago. Sales increased 39% to $423.5 million. Company raised its outlook this year, partly due to successful integration, and its recent acquisition of AmSafe Global Holdings is going well. TransDigm has pursued a growth through acquisition strategy that continues to work very well. So in a healthy market, this is a stock that really could have gotten moving because the numbers were quite good, and again, a raised outlook, but stock's having a hard time making headway today. Not surprising at all. Another stock just getting crushed today. Let's take a look at shares of Fossil. It's FOSL on the NASDAQ. This chart can barely hold its price bar here. Fossil is down $47.04 today. 37-point downward move in one day to 78.73. Big gap down for Fossil. They make watches, of course, other accessories, their specialty retailer. The company missed sales estimates in the first quarter. They also cut their earnings outlook due to European weakness. Earnings up 8% to 93 cents a share. Sales up 10% to 589.5 million. But they're talking about problems in Europe. Not good for shares. News from Fossil definitely affected other specialty retailers. Let's take a look at Michael Kors. Thought a stock that was setting up nicely. You can see here. In fact, I mentioned it on my webcast last week. It was starting to work its way higher. Perhaps put the finishing touches on a decent base here, but then the stock over the past 4 trading sessions really has fallen apart. Michael Kors trading in the top half of its range today after early weakness. Most stocks are in that boat now, but Michael Kors is still down 5.1% today to 41.85. Yet another broken stock. So that's really the theme of the market right now. The number of broken stocks out there definitely have the upper hand over healthy ones, and even the ones that are healthy, I just can't really give them much of a chance of working in the current market environment where clearly sellers are still in control. So got to pay attention to that, and it's a key strategy that I use when I manage a model portfolio, when I write my newsletter. My job as a newsletter writer is to keep subscribers in the market at the right time, and I need you out of the market at other times. And right now, with the market in a downtrend, it really does not make a whole lot of sense trying to make money in the types of stocks that I target for ultimate growth stocks, which of course are growth stocks that sometimes can sell at high multiples. These are the stocks that are most vulnerable in this type of market environment. All right, folks, a couple more earnings reports to go over when we come back. Final segment coming up. We'll talk about some earnings reports due after the close. You're listening to Breakout Investing on TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
What you think about, you bring about. What you focus on grows. If you're committed to becoming an extraordinary trader and investor, then make mastery your outcome. Yes, my best student, Steve Rhodes, became my best teacher. But even more important is what he's taught me, and the time is now for you to take advantage of his knowledge.
Thanks, Tom. I've learned that it's not what we do once in a while that shapes our lives, but what we do consistently. I want to teach you the consistency that exists in the stock, futures, forex, and commodity markets day in, day out. For one solid day, Friday, May 18th, I'm going to conduct an online master trader course that'll teach you how to buy and sell the D point. This one pattern alone, with the single best entry and exit techniques, when combined with my money management strategies, will create extraordinary rewards for you and your family. The course will be archived so you can review it as many times as you'd like, and it'll teach you to become a master. All the details are on the homepage at TFNN.com. Sign up today because mastery is one click away. It's your decisions, not your conditions, that determine your destiny.
Wow! Go get him, folks.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. As we head into the close here, let's just get a quick check on the markets here. Another resilient performance 2 days in a row. Remember yesterday, over the weekend, I remember Sunday, the stock futures were pointed to a decidedly negative open after these election results in Germany and Greece and France. And it ended up not being too bad a day yesterday. We ended mixed, mostly unchanged, near session highs. Here we had a lot of selling in the market today. And right now we have the Dow still down 64 points, but well off its session lows. It's only down 0.5% now to 12,944. Impressive performance by the NASDAQ Composite. It went all the way down to that 2,900 level, and it actually hit an intraday low of 2,900, but it has bounced. It is now 49.5 points above that level. Still down about 8 points, 0.3% to 2949, up near its session high, and the S&P 500 down about 4.5 points, 0.3% to 1365. Couple of bright spots in the market today. Vertex Pharmaceuticals, big gain for the stock yesterday, up 55%. It is extending gains today, up another 10% to 63.85. Hey, let's talk about some good news in the market today. There hasn't been much of it, but big gain yesterday on positive study results for its two-drug therapy for cystic fibrosis. This is a genetic disorder that affects about 70,000 people worldwide. So Vertex having a good day. And let's check in on Zillow. This is a stock that I flagged in my newsletter. Very tempting to buy Zillow here, but man, these good technical setups in weak markets, they can be traps. But I'll tell you, Zillow is acting right after reporting earnings late last week. Zillow outperforming again after hitting an intraday low of $39.58. The stock is now trading around $43.14, up 5.1%. And earnings last week were sensational. This is a real growth story. Again, we've been talking about a lot of these IPOs that have come public with good sales growth and no earnings. Well, Zillow, you have both. You have a profitable company. Zillow turned its first annual profit in 2010. It's expected to earn 25 cents a share this year. That's up 150% from 2011. In 2013, they're expected to earn 54 cents a share. That's up 116% from 25 cents in 2012. But the earnings were sensational last week. Not so much about big increases in traffic to Zillow.com, but it's about their mobile applications. They said that more homes are being viewed on their mobile apps than the website. Real estate agents are buying local advertising on their mobile apps, but their revenues were up 103% from a year ago to $22.8 million. Small company, but a good technical breakout. Let's just take a look at a weekly chart for Zillow, and you'll see this is just a picture-perfect cup with handle breakout here, swing point of 39.48. I'd like to pick up Zillow on a little pullback here. Of course, the risk is it could keep running higher here, but I think that this is still a damaged stock market, and it's not clear to me that major averages are ready to start a new uptrend at this point. All right, let's check in on EOG Resources, oil and gas producers that's set to report earnings after the close today. EOG is down 67 cents to 104.10 ahead of the results, trading all the way up near its session high. I mentioned the damage done to the E&P firms, but EOG Resources is expected to produce very nice growth in the first quarter, with earnings up 71% to $1.16 a share, sales up 25% to $2.4 billion. And finally, let's check in on Jazz Pharmaceuticals, a name we've talked about on this show. Shares of Jazz down 45 cents to $50.32 ahead of its results. Big top line and bottom line growth expected. Earnings of 84 cents a share on sales of $102.5 million. Its key drug is Xyrem, used to treat narcolepsy. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 Eastern. I'll see you back here on Thursday, folks. Have a great afternoon.